Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures, and you can see the beginnings of what I've been discussing the last few days. And for those of you that have missed it, essentially, in a nutshell, it's this. The upper band has run away from price. We engaged it here, it's run away. And the likelihood that we see middle band before we see upper band again is very good. I was expecting a range day, consolidation day yesterday. It was on balance a range day for the most of the day, with 2112 on the futures being the high end of the range, 2103 to 2101 the low end of the range, and you know it traded in a very nice range, which from from a trader standpoint is fantastic. So it made that very typical morning dip right at our proprietary level, line up with a lot of our stuff. And I put a tweet up just to give people an idea of how we deal with these situations in the chat room. So if you missed that, go ahead and look at my timeline. I don't tweet all that much, so it won't be all that hard to find. People always ask me why I'm not constantly tweeting. It's because I'm in the chat room. It's because my subscribers are they're my absolute priority. And, that's just it. Whatever time I would spend on Twitter would be time away from them. And, markets move pretty fast. So that's people always ask me that question, why I'm not tweeting all the time like other people. And to each their own, but, my focus has to be, where it is. Now, what we're seeing is a migration, first of all, back to the 9-day simple moving average. If the 9-day simple moving average can go, and I'm not so much concerned about the 9-day simple moving average as I am about the weekly pivot sitting at 20.99.20. That has been support all week. If that area were broken today and closed below, then the bears would have an opportunity on Sunday Sunday into Monday to push things. And if they're able to keep the weekly pivot of next week, whatever that happens to be, I have no idea what that will be, but I bet we'll know by the time we close today. If they can keep that weekly pivot number as resistance through the first part of next week, then you'll see an opportunity to move down towards the 2080 to 2083 floor. That is really the delineating line between who controls this tape. The middle band is going to continue to ascend fairly rapidly as it sheds these older prices. I would not be surprised if the rubber met the road at the middle band right at 2080 to 2083. That would make a lot of sense, at least on my chart. That would be a very much high noon moment for the market where it would have to decide, is it something that wants to trade above the middle band and therefore by definition is buy the dips, or is it going to break and hold and turn into another sell rallies market like we had a couple of months ago? So that's what I'm, we're at the end of the week, so time for a little bit of an outlook webcast into next week. Okay, everybody have a fantastic day. Have a fantastic weekend. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. I'll be back Monday morning with another webcast. Trade 'em well, everybody.